Rohr here with a concise highlight on the morning of Friday, August 29th, 2014. It's currently 7:35 a.m. U.S. time, and we're coming to you a bit later than usual because we wanted to make sure that we saw some of the early U.S. data today. We'll be back to that shortly. Two administrative notes first. One, we will be in on Monday morning on Labor Day. The U.S. may be closed, but being the first of the month, there's just too much important data out elsewhere to just take off for the day, and there will be fresh analysis and the typical weekly calendar into Monday morning as well. Number two, we've been having a bit of problem with our blog post notifications. We suggest for now that you check between 8:30 a.m. and 9 a.m. Central Time for any updates. And just a brief word on the macro front. Anyone who doesn't believe we're in a geopolitically driven bad news is good news because of central bank accommodation sort of market in the equities really is in need of psychiatric care at this point. We have all the macro data across the board today negative right into the U.S., but the equities are up on the back of some lessening of immediate tensions in the Ukraine. So what does all that mean to the markets? It means, again, that we are up about $5 today into the 202 area in the S&P. This is the September future short-term charts, hourly on the left, 30-minute on the right. And here is your old high at 202.50. We know that this week the oscillator resistance and topping line on the weekly chart are about 210, give or take $1. And as we head into next week, those move up because the 41-week average moving up and the topping line moving up to about 2015. And what was most interesting about the market maintaining the uptrend, as we noted before the opening yesterday, the market was down into about the 1990-91 area when we made our recording at about 7 in the morning, and we had noted that anything down into 1987 to 88 where the channel line support. This is the overall channel up from the sharp reaction low all the way back down at 1900, going back into the Thursday the 7th, even though it traded overnight below that Friday the 8th before cleaning up and being up on the actual opening on Friday the 8th. The market held the channel. It held against the negated down break from last Friday, the nominal down break on the drift sideways, and most of all, it just about filled the gap to last Friday's 1988 close, pretty much on the dot, and held. So if you held the gap, the negated down break, and most of all the channel support, then you're still good. It doesn't matter if supposedly there was an invasion of Russia into Ukraine on early Thursday morning. By the time they sorted all that out, there was a question about whether it was a real invasion as such or more of these internecine sort of feud and low-level attacks, although there definitely are Russian troops inside Ukraine at this point. And once again, the U.S. and the European allies seem to be doing little about it amidst their wailing and gnashing of teeth over Russia's belligerence. We see where going out into the late part of the day today, this upward channel is up around 1999. So if the S&P is going to party like it's 1999, it won't be below 1999 later today, other than a very narrow window. That means you are going to close a week above 2,000 in the S&P. And that encourages the idea of further strength. And let's not forget, this is closed on Monday along with the rest of the U.S., so your next opening will be Tuesday with potential for some sort of influence out of Europe.